Welcome to Business Edge. I'm Esther Awoniyi. Many thanks for joining us today. On the show today, we'll recap three major themes from the World Economic Forum, which wrapped up last week, and that is rebuilding trust, escalating trade tensions, and how Africa can strengthen its regional value chains in the context of geo-economic shifts. We'll be speaking to an economist and, of course, an international trade expert to take us through those burning issues. But in the meantime, let's start with our top business headlines from across the continent. Now on to our headlines now. Nigeria's Dangote Petroleum Refinery says it can supply fuel to about 150,000 retail outlets operated by the Independent Petroleum Marketers Association of Nigeria, IPMAN, following a meeting between the management of the refinery and executives of IPMAN. IPMAN President Abubakar Migandi, who confirmed the meeting, also stated that the refinery management had promised to supply products to IPMAN's more than 30,000 members. The Dangote Petroleum Refinery commenced the production of diesel and aviation fuel on January 12th this year. According to reports, regulatory assessments of the refined products are underway before the final approval for fuel dispensing. Well, elsewhere, Libya's National Oil Corporation, NOC, on Sunday announced the resumption of crude production from the Sharara oil field in the country's south. The crude production facility, which was shut down on January 7th this year following protests by area residents demanding better infrastructure and economic opportunities, produces 300,000 barrels of oil a day. It accounts for a quarter of the North African country's total production of 1.2 million barrels per day. The oil field, operated by a joint venture between the NOC, Equinor, OMV, Repsol, and France's Total Energies, is vital to the plans of the NOC, which in October last year said it plans to increase its crude production to 2 million barrels per day over the next 3 to 5 years. And Kenya says it will pay an estimated 25 billion Kenyan shillings in interest and fees to the International Monetary Fund in the 12 months ending April 2024. The lender has revealed that it expects to earn about 2% of its lending income from Kenya in the financial year of 2024, making the country one of its top revenue earners. According to the IMF, Kenya's total general resources account charges are projected at an SDR of 116 million for 2024. The IMF on Wednesday approved the disbursement of 110.8 billion shillings, that's about $684.7 million to Kenya, increasing the size of its total lending to the country. Well, Kenya returned to the IMF for loans in 2020 following the outbreak of the COVID-19 pandemic, which plunged the country into a recession and has since grown to become one of the IMF's top borrowers. And as of December 31st last year, the lender's outstanding loans stood at 2.051 billion shillings. Now, this is the 9th biggest in the world, only behind Ukraine, South Africa, Pakistan, Egypt, Ecuador, Colombia, Argentina, and Angola. Meanwhile, dollar-strapped Kenyans are offering local currency for their dollar-denominated loans, sparking defaults and straining banks. The Treasury disclosures to the International Monetary Fund show borrowers in sectors like real estate and construction are the hardest hit as they lack the dollar earning power of exporters. Now, this technical default is pushing non-performing loans to record highs, hitting 615.54 billion Kenyan shillings in September, according to the Central Bank of Kenya. The Treasury has told the IMF that it intends to exit the oil import arrangement it signed with 3 state-owned Gulf companies last year to tackle challenges related to the scarcity of dollars because it is cognizant of the distortions the deal has created in the FX market. Well, those are our top headlines. We'll take a quick break and we'll be right back with our first conversation. To stay with us. Welcome back. Before we head to our first conversation, a quick market review from trading last week. Nigeria's local bourse had a very profitable outing last week with the benchmark index gaining in all 5 trading sessions of the week. It was also last week that the market breached the 90,000 point mark over the week. Gains in industrial heavyweights, Dangote Cement, Boa Cement, WAPCO, Dangote Sugar, and Transco swept the market to record highs never seen before. Now let's take a look at the numbers now, starting with the all share index. Well, there you have it, 94,538.12 points is where the index closed last week. 13.8% a weekly gain for the bourse, a very high number, still reflecting the optimism that investors have for the market and, of course, the broader economy, specifically ongoing reforms that are all geared towards boosting the economy. Let's take a look at the other numbers. Market capitalization, that also climbed for the week, also 13.85% at over 51 trillion. Now let's go to the week's top gainers. Banking index, well, not for sectoral performance, I beg your pardon. Banking index, so we did see some gains here and there from some banking counters, but overall for the week, the banking index did depreciate, down 0.12%. But for the rest of the sectoral indicators that we track on this show, they were all in positive territory, starting with the insurance sector up over 14%. Oil and gas sector also gained just under 9%. The consumer goods sector also coming in stronger at over 8.1%. And the industrial goods, who were the stars of last week's rally, the likes of Dangote Sugar, the likes of Dangote Cement, Boa Cement, and Transco, all pushing the index to highs never seen at the market before. So just take a look at that, over 46% gain in just 1 week from the industrial goods. If we could quickly move this along, let's see some of the week's top gainers. Initiate PLC, 59%. Just take a look at these changes. The gains for the week, over 59% for Initiate. Dangote Cement, over 53%. Honeywell Honeyflower, up 50%. So significant gains for these counters. May and Baker from the pharmaceutical sector up over 50%. Nichols also coming in top 5th spot at over 46%. Let's quickly take a look at the week's top losers. Royal Exchange down 22%. Ikeja Hotel down over 10%. Linkage Assurance down over 8%. Multiverse lost 6.5%. And UCAP PLC also slipping 6.27% for the week. So as you know, the market is opened for the week at 10 a.m. The market opened for trading. So we'll definitely be keeping an eye on the numbers to see how trading progresses this week. Will the all-share index log new highs this week? Well, we'll tell you as soon as the numbers come in. We'll take a quick break and we'll be right back with our first conversation. Join us again. Welcome back. At the just concluded World Economic Forum last week, world leaders called for urgent action to rebuild trust in the face of increasing fragmentation and political divides. According to the president of the European Commission, Ursula von der Leyen, the world is not just at an inflection point, but at multiple inflection points. But what does rebuilding a trust mean for Africa, and how can the continent build trade resilience in the face of escalating global trade tensions? Bolajji Sofoluwe, an international trade expert and group managing director of UK-based ETK Group, joins me now for this conversation. Bolajji, thank you so much for joining us today.
Thank you so much for having me, Esther.
Well, let's just jump right in. What are the unique challenges and opportunity Africa faces in rebuilding trust across political, economic, and social realms, considering the World Economic Forum's theme of rebuilding trust?
Well, to start with, I do like how we're using the word rebuilding trust, because I just wonder if there was a baseline of trust that existed in the first place. I think it should have just been building trust, because Africa is still facing the trauma of exploitative relationships and things that have completely complicated their ability to trade globally over the years. And I just wonder whether Africa should have been coming from a different perspective where, you know, we're talking about building the foundations of trust in the first place, For me, that's the way I see Africa's positioning in the grand scheme of things.
But I wanted to just get your thoughts on the theme itself and perhaps how apt it is with all the geo-economic shifts we're seeing, escalating trade tensions, and the crises that we're seeing. We're still reeling from the impact of the 2020 COVID-19 pandemic. Now we have like additional layers of crises. This time around, outside of the Ukraine-Russia war, we're having the Hamas-Israel war also. So would you say that the theme was quite apt?
I think it was apt, but again, going back to what I said earlier, I think it should have been revisiting what the basis of trust looks like in the first instance. I think when you look at the geopolitical crisis at the moment, when you look at the pockets of crisis that are coming up, you will find a common thread, and that is the fact that, some of these regions have been propped up over the years, so those tensions have existed for a very long time. It's just that things like COVID-19 exacerbated those problems. And I think what we're experiencing now is a fallout from the tensions that arose when protectionism started to rise during the COVID pandemic. And we realized that we were not so much a global community as we thought we were. People were keeping away vaccines, poorer nations were not getting access to these vaccines. And all of these things must have destabilized, the initial trust that people had between each other. And trust is the major currency for global trade.
Maybe you're absolutely right. Now, taking this also from an African perspective, African leaders were also at the summit last week, and a lot was said about how, especially on the issue of trade and investment, boosting foreign direct investment on the continent outside of human indicator issues like education, health, etc. But how do transparent governance systems and trustworthy institutions contribute to economic growth, business and operations, and also entrepreneurship in Africa, which is some of the discussion points for African leaders last week? I'd like to hear your thoughts on that.
Okay, so one of the things that I have observed over the years is that we tend to go to these summits with our begging bowls, asking for foreign direct investment, whereas we've got quite a lot of work to do back home in terms of developing the infrastructure, whether soft or hard infrastructure, to be able to absorb foreign direct investment in the first place. I think if you're looking at, for instance, the currencies across the continent, they're getting weaker and weaker by the day. You just spoke about Kenya and the increase in non-performing loans. Any country in its right mind looking to invest in any target market will look at the performance of their currency before doing so, because it escalates the risk of investing in that country. And I think even though the African leaders went with a very strong narrative around building institutions in Africa, we're yet to actually see the impact of those institutions that they are building. And so I don't think they really had a leg to stand on. I mean, the Nigerian delegation was out there, and the insecurity in the country was getting worse by the minute. And so these are the sort of things that need to be considered before you start to think about bringing foreign direct investment in. At ETK Group, what we support businesses with their trade and investment into the continent. And some of the rhetoric that we're hearing is very different from what's happening at the top. So what the politicians are discussing in terms of market entry and building stronger ties with Africa. We've seen high-profile visits from America, for instance, and from China into Africa this month. But yet the rhetoric on the ground with businesses, so the B2B rhetoric, is very different from what you're hearing at the high level.
Well, that's not very encouraging. But while all of this is happening, Africa is still trying to establish a strong footing in international trade. There are ongoing conversations, as you know, around the Africa Continental Free Trade Area, that pact to increase trading amongst African countries. Sadly, it's still somewhere around under 20%. African countries are still not trading enough with one another. For Nigeria, many of our biggest trading partners are not even on the continent. I'd like you to also speak to this point. There was a new private sector plan that was crafted with input from the World Economic Forum, looking at some specific areas like automotive industry, agriculture, etc., sort of outlining perhaps additional policies or additional ways in which the continent can make that document or the pact itself work better for African countries. And I know that it's many times it's on a case-by-case basis. When you look at issues like the rules of origin, for instance, Nigerian manufacturers have an issue with that, not just Nigerian manufacturers across the African continent. So sometimes the rhetoric coming out from amongst the members within the pact themselves is different from what we hear typically at a forum like the World Economic Forum in terms of how the workability versus what actually happens on the ground. What are your thoughts?
So to your previous point, Esther, I would apologize for being a bit of a Debbie Downer. I'm usually, in fact, in my company, ETK, they call me the chief Africa optimist. So I'm usually very excited about the prospects for Africa, but I also think that we do need to be very honest with ourselves and transparent with ourselves as well. I mean, I'll address three of the points that you've just raised. The first one was around the trade currently sitting at around 20%, and we're looking to get to that magic number of 29% by 2035 as a result of the Free Continental Trade Area. Again, we're looking at some of the infrastructure input that it's being put in place in order for that to be achieved. We're looking at road infrastructure, rail infrastructure, all these projects ongoing around the continent. However, you're seeing a different rhetoric coming from political leaders where it comes to escalating conflicts. You're looking at instability in governance and governments. We saw how many sort of military takeovers in 2023 across the Francophone region of Africa as well. And then you're looking at sort of escalating tensions between Egypt and Somalia. You're looking at escalating tensions between the DRC, Rwanda, and Burundi. And you're looking at all of these things that actually sort of frustrate the efforts of the private sector and frustrate the efforts of those leaders who are really looking to integrate the continent rather to further fragment the continent as well. So there is a long road to achieving that 29% additional boost or bringing 40 million people out of poverty through the Free Continental Trade Area. But we need to face that head on. We need to be pragmatic about the solutions to be able to achieve this. And the pragmatism needs to start with leaders actually taking note and listening to the people in their countries, particularly the private sector leaders, about how they can push these reforms through.
Well, that being said, and you made some very good points there, but that being said, growth cannot happen without trade and investment. So still bringing it down to Africa and perhaps even Nigeria, how should we begin to go about addressing the issue of institutions and trust in those institutions, like the judiciary, for instance, where there are cases of litigation, foreign investors have the confidence that the cases will be treated fairly and they will get justice, and also the sanctity of contracts. If there's a PPP ongoing and if there's a change of government, what is the guarantee or what are the guarantees that whatever investment has been made by these foreign investors will be safeguarded and there won't be somersault in policies, etc. We've seen this happen again and again. But what are your thoughts around that in terms of how African countries, and we have a new government now, how this government can begin to maneuver and ensure that trust is at the center of building stronger institutions?
Well, very good question, Esther. And I always enjoy our discussions. I think, we need to go back to sort of the things that have caused the mistrust in the first place. And we need to think about how public funds have been misappropriated. We need to think about capital flight. I mean, as you probably know, between the year 1970 to 2018, nearly $2 trillion has left the continent. That actually makes Africa, puts Africa in credit to what they have actually received in inflows and foreign direct investment. So we need to start thinking about how we can curb things like capital flight, because obviously you have things like misinvoicing going on where, I mean, how can Africa, for instance, produce 30% of the world's natural resources, 30%, 40% of the world's gold, and 90% of its chromium and platinum, and still have such weak currencies? How on earth is Africa one of the largest, the fastest growing middle classes in the world, and still there's so much poverty around. And how on earth is Africa still struggling with the youth, with the youth population that we have, which is one of the advantages we have over several parts of the world, particularly the EU. So we need to look internally, and we need to create policies that actually flag or demonstrate to foreign investors that we're very serious about economic reform. We're very serious about investing in ourselves. I was very pleased when you were reading out the all-share index for the Nigerian Stock Exchange. The fact that Nigerians are investing in the stock exchange shows that there is an increased confidence in our local institutions. And this kind of activity needs to increase in order for others to have confidence in us.
When you look at all that's going on, the geo-economic shifts, of course, and all the other multiple crises, Africa is often referred to as the last frontier for investment, etc. And we often hear that, look, Africa needs to seize its moment. It's unfortunate that the continent continues to grapple with many of, some of the elements you've just mentioned, all based around trust. But it's still an opportunity, nonetheless, for the African continent. In building trust and also building resilience, as it were. Do you have one or two recommendations going forward, what the continent can do to seize that moment, as it were, to stand on its own for once, focusing on trade and not aid, which has also been something that we continue to hear, but just standing on its own and being recognized as a region that can trade effectively going forward. What would you recommend?
I think first things first, we need to take advantage of the fact that, and I say this, I mean this in the most strategic manner, and not that we're gloating over what's going on in the rest of the world, but some of the tensions happening in the Middle East with the Red Sea crisis, etc., mean that, obviously things like crude oil from West Africa has actually increased in value because obviously we're able to get product across without having to go through that corridor. So we need to take advantage of our geopolitical positioning and then start to think about how we can strategize, not with the fact that we're expecting these tensions to go on long term, but the fact that they are occurring in the first place. We need to start thinking about how that affects us as a continent. But also we need to start thinking about encouraging companies to manufacture locally. We need to increase industrialization across the continent in order to trade with each other, and then we can start thinking about how we can increase trade with the rest of the world. But let's keep the value local.
Well, finally, and in 10 seconds, how optimistic are you that world leaders can put their differences aside, come together, rebuild trust, and just address many of the world's pressing issues?
I'm optimistic that humanity will prevail, and I really believe in what the Africans call Ubuntu, which is I am, therefore we are. It's more of we need to put a joint effort together, both from a local level and demonstrate that at a global stage, so that we can start to increase that trust and rebuild that trust across the world. So that we can actually start trading each other and to put humanity first.
Right. Thank you so much. Well said. Thank you, Bolajji, for talking to us today. We appreciate your time on the show. Bolajji Sofoluwe, international trade expert and group managing director of UK-based ETK Group, just unpacking some of the themes from the just concluded World Economic Forum last week. We'll take a quick break and we'll be right back with the rest of the show to join us again. Welcome back onto our international headlines now. Oil fell as OPEC member Libya restarted output at its largest field, boosting global supplies and overshadowing, for now, concerns about tensions in the Red Sea that look set to continue disrupting shipping. Global benchmark Brent dropped towards $78 a barrel, falling for the third day in four, while the U.S. counterpart, West Texas Intermediate, was near $73 a barrel. Libya's National Oil Corporation said the flows from the Sharara, which previously pumped about 270,000 barrels a day, would resume after a 3-week stoppage. Crude has struggled for direction this year, rising and falling on alternate weeks. The seesaw pattern has arisen as the impact of tensions across the Middle East, including the Israel-Hamas war in the Gaza Strip, is balanced by expectations that oil markets will remain amply supplied. Elsewhere, the curious strength of the euro area labor market is driving the European Central Bank's push against expectations of impending interest rate cuts. Defying economic textbooks, unemployment just hit a record low amid what is shaping up to be the first recession since the pandemic. The accompanying jump in pay means officials can't sound the all clear on inflation despite it plummeting to less than 3%. The ECB sees unemployment ticking up this year, with pay gains gradually moderating to 3.3% in 2026 from 5.3% in 2023. Some corners of the economy show signs of a slowdown, like Germany's beleaguered manufacturing sector, but uncertainty is high. Meanwhile, European and U.S. stock futures rose, extending gains in global equities that pushed the S&P 500 index to a record high on Friday. Now, the contracts climbed in Asia after a rally in tech shares boosted the S&P 500 past 4,800 points last week amid optimism over expected Federal Reserve interest rate cuts and the artificial intelligence boom. The Chinese stocks bucked the trend as pessimism over the nation's faltering recovery fueled further losses. Now, Asia's benchmark stock index more than halved its early advance as the Hang Seng index dropped over 2%, and benchmark indexes in mainland China fell. China's commercial lenders kept their benchmark lending rate unchanged on Monday, in line with the central bank's decision last week to refrain from cutting borrowing costs. Those are our top headlines. We'll be right back with our next conversation. To join us again. Welcome back to Business Edge. Still focusing on some of the key themes from the World Economic Forum last week. A white paper published by WEF in collaboration with the Friends of the African Continental Free Trade Area outlines a bold action plan to unlock Africa's vast economic potential through increased global business and investment. And now joining us now is Clive Ramathibela-Smith, the Senior Executive Partner, Hecare Capital Partners. Clive, thank you so much for taking the time out to join us today. Now, the white paper highlights 4 key sectors for investment: agriculture and agro-processing, transport, logistics, automotive and pharmaceuticals. To what extent does this focus address the needs and priorities of all African countries, considering their diverse economies and development levels?
Thank you very much for having me this afternoon. I appreciate the time. You know, it's been well said, my sister, that Africa is at the brink of great things economically. It has been looked at for the last, I'd say, 15 years, 10 to 15 years, as an aspiring economy that is going to bring about change. But we've seen very little in terms of penetration, particularly from the European countries. And I think in the last half a decade, the difficulty has been the fact that even though there's a lot of influx of capital investment in quantum that is available, identifying opportunities in Africa has been coming very far and very slowly into the, particularly into the countries that mostly need it. We are still sitting with Nigeria and South Africa still leading the industrial revolution in terms of being the most industrialized countries in the continent. And we also have a very diversified way of working with things, particularly when it comes to the Western African countries. which we haven't seen as much of a jump as we wanted to. The trajectory and the possibilities are there, but we haven't seen that handover to allow these independent states to do what they can to be able to punch out and create wealth in those particular areas, which include your agriculture, which include your ITC, which include your manufacturing, agro-processing, things, a lot of things, there's a lot of goods, particularly in the agricultural space, is still leaving the African continent unprocessed. And what that means is that it comes back to us in a form of a different product altogether with higher margins of growth and profitability on them. So it's a very complex one, but I think the argument now is this the platform? Is the World Economic Forum going to be really taking decisions that are going to highly impact over the next 3 to 5 years?
Right. If we could just quickly move this along. Now, attracting foreign investment is crucial for the plan's success. But how can this be done without creating new dependencies or compromising the country's economic sovereignty?
Very good question. And one of the factors there would be what kind of capital do we attract? What kind of foreign investment do we attract? And how do we make sure that we still remain at the bottom end of what is critically controlling the sphere of economic trajectory so that it doesn't go over what we've seen in the past in a colonial system that has always been the burden for Africa. So the first thing that needs to happen is, what are those terms and conditions? We've seen how aggressively China has gone into the continent, particularly on the agricultural space. We've seen Europe slowing down, by the way, their participation on the African continent. Obviously, this has to do with also demand and supply, but also America we now know they've deleted 4 other countries, or 8 countries in actual fact, who have been taken out of the likes of AFTA and the African Economic Transformation Forum. So those elements show you that Africa has to do it itself, but they have to set their own terms and conditions to make sure that we prosper. And to do that, you need to make sure that when foreign investment comes in, we still have control of how those assets are being controlled, how the economy is going to be translucent. It's going to be able to make sure that those people that are outside are still going to be contributing positively to the economic development. We still see a lot of space or a gap between the haves and have-nots, particularly in our continent. So big companies are still having the lion's share of a lot of activities in those particular sectors. So that's sad, but it can be changed.
You make some very good points there. Now, finally, if we could just quickly look at the youth, often referred to as Africa's demographic dividend. How does this plan cater to youth vis-a-vis the creation of jobs on the continent? Very key.
We are the youngest continent in the world. That gives us a lot of prosperity, and that gives us a lot of opportunity. And I think our young people are doing a lot, especially when it comes to introducing new technology. I've seen some young farmers, we're making agriculture fun again. And youth needs to understand, I mean, this is the source of our food. This is where we get our income. And so them using things like drones for drone technology in terms of cultivation and innovation, them using things like AI, for example, artificial intelligence into those particular spaces. It has definitely made agriculture more attractive. And young people can do all sorts of other things innovatively that us, the older generation. I say that candidly because I'm about to reach my 40s, so I'm very worried about that. I'm out of the scope of youth. But we have a very well-diverse young people on the African continent who are full of ideas, who are full of vigor. And we need to provide them those platforms, those opportunities. And it's the role of government around the African continent that must make sure that they don't leave the youth behind and they participate fully in the economic transformation of this continent.
Clive, I must thank you for your time. I'm afraid that's all we can take. But thank you so much for talking to us today. That was Clive Ramathibela-Smith, a senior executive partner, Hecare Capital and Partners, speaking to us on some of the themes from the just concluded World Economic Forum from last week, rebuilding trust. That was the theme as leaders called for urgent need for world leaders to put their differences aside and come together to rebuild trust and, of course, collectively address all of the crises that continue to bedevil global growth. Well, that's our show for today. Thank you so much for being a part of Business Edge. Follow us on social media. We are at News Central TV. From the team and I, it's bye for now.